We wanted to build a business to take care of wealthy American families across the country, not just the Rockefellers. It's a distinctly American notion that philanthropy should be part of wealth creation. I tell people today, younger bankers, you want to really get a long-term client, make sure you tell them when they shouldn't do the deal.
The Rockefeller name has been synonymous with wealth for more than a century. Rockefeller Capital Management traces its roots to a family office established by John D. Rockefeller in 1882.
It became a multifamily office in the 70s, and in 2018, we bought it from the Rockefellers, and Jacob Rothschild owned a piece at that time, and we created something called Rockefeller Capital Management.
Its president and CEO, Greg Fleming, saw an opportunity to turn a storied family office into a modern wealth management firm serving rich families across America.
We bought it with $18 billion in client assets, and our client assets today are over $200 billion, so we've grown the value of the company quite significantly.
Today, Rockefeller Capital Management provides clients with investment management, estate and tax planning, and family office services. Fleming took an unconventional path to Wall Street. Raised in a family of educators, Fleming headed to Yale Law School after graduating from Colgate. But during his final year at Yale, he discovered management consulting and took an unexpected turn into business.
I said, I really want this job. And he said, well, you came in late. We filled the class with business school students. We don't typically hire from law schools, but we'll keep you in mind. And he came back 2 minutes later and he said, you're in. And it changed my life.
Before building Rockefeller Capital, Fleming also spent more than 2 decades at Merrill Lynch, eventually becoming president of the firm. His tenure coincided with the 2008 financial crisis, and he helped negotiate Merrill's sale to Bank of America.
You know, I regret having to sell Merrill Lynch. It was a great firm, and I do sometimes think back to, could I have done things differently? I wasn't yet president when that position was put on because it was a 94-year-old company when I sold it, and that was a hard thing to do.
Today, Fleming is focused on helping clients navigate a rapidly changing world shaped by artificial intelligence and economic uncertainty. He says wealth management is about more than markets and technology.
We're counselors in that, and that's a real privilege to do that because this is really the most important part of their lives.
So why do families need specialized advice? If they made a lot of money, presumably they know how to make money, so why do they need you to help them make even more money?
Well, you know, families, and you know this, David, if they're built the wealth through building a business in something else, and our families have businesses that they built in so many different industries across the United States. It's really a remarkable country and economy with the pockets of wealth in so many different places. The expertise was in the business that they built. They're not as affluent most of the time on what they do with the wealth and how they preserve the wealth and how they plan for the wealth and how they invest the wealth. That's what we're there for. We really are there to take care of all of the needs, and they can become quite complex. You know, our families are multi-generational, and maybe the business is still ongoing, or maybe they've sold the business and they're just trying to figure out how to have the wealth stretch for generations. And that's not where their expertise is. That's where our expertise is.
Now, do you find that families that are wealthy, they spend a lot of time planning to give away the money upon the death of the founder or the co-founders, or do they actually give it away before the co-founder or founders die?
I think it's more the latter, that families give a lot of money away along the way before the founder or co-founder dies. You know, I think it's the most philanthropic country in the world. We worked with somebody recently who won a lottery. One of the first things they were focused on wasn't just how to spend the money, but how to give some of it back. It's a distinctly American notion that philanthropy should be part of wealth creation. We help many families set up a foundation, to make sure that it gets done in the way that the family wants, with the causes they care most about. So it's a huge part of almost every single family we work with.
Now, the Rockefeller & Co., which you bought, in what year did you buy it?
2018. We closed on March 1, 2018.
Okay. At that time, the family decided to sell. Why did they sell Rockefeller & Co., or part of it?
They sold part of it. Remember, they stayed in, and that was something that we were very focused on. We wanted to build it with the family, and they're quite pleased with what we've done with it. You know, they have an incredible name, and we've really been privileged to build this company in their name. But they wanted to modernize it, expand it, build world-class technology, create something that could endure going forward, and that's why they sold a significant part of it.
So when you bought a significant part, you were backed by Viking, is that correct?
Yes, Viking Global Investor. The founder, Andreas Halvorsen, is still in charge and still runs Viking, and Brian Kaufman runs the private investment side. They've been a terrific partner of ours, and I really picked Viking because I was quite pleased with the way they thought about building a business the right way over the long term.
So after you bought it at a certain price, you and Viking controlled the company. The Rockefellers were still in. And then a number of years later, a number of other investors came in. Did you ever publicly say what you paid for the company when you bought it?
We didn't publicly say what the price was when we bought it, but we bought it with $18 billion in client assets, and our client assets today are over $200 billion. So we've grown the value of the company quite significantly.
So the inevitable question is, are you going to take the company public?
In the final analysis, I'm a fiduciary, as always, to the shareholders. Building this company is one of the great things in my career that I'm proud of. But we don't need the capital that would come with an IPO, which is a lot of the reason why people do IPOs. We just finished the recapitalization in December. We have a very happy set of shareholders, old and new. They invested knowing that the best way to continue to build this business is for the long run. And I think they're comfortable with the company being private in the long run. That's the preferred route.
Are most of your clients in Americans? Is that where you focus on, America?
Overwhelming percentage, yes.
Okay. And have you thought about moving to Asia or Europe?
We've had many conversations, people coming to us, opportunities. The name carries well. The Rockefellers, the footprint is not just in this country, it's in Europe. The wealth creation in this country, David, continues to be, frankly, staggering. And the number of families that we can serve in this country and the number of places. There are these growth cities in this country where there's a tremendous amount of wealth being created, and we like to be on the ground in these cities with our private advisor teams, close to the families, close to the clients. So there's been such a significant opportunity here, we've stayed focused on the U.S.
Well, suppose I say I watch this show and I've heard about your firm, but I don't know if I'm wealthy enough to be eligible. How much net worth does somebody need to qualify to be have their money managed by you?
We don't dictate to the private advisor teams a minimum. The sweet spot is probably 20 to 25 on up to 250, 500 million, and we take care of many families that have more than $1 billion.
Let's suppose I say I've got $50 million, I inherited $50 million. I don't know anything about money. I'm something in the non-financial world, but I want to not lose my $50 million. If I give it to you and you manage it, what kind of rate of return can somebody realistically expect from a money manager like Rockefeller?
Well, remember, we're primarily on the wealth management side, so it's open architecture. We're providing the advice on which investments to go into. Most of our clients we help put into third-party firms that are on our investment platform, and we do a lot of diligence on making sure that we bring in the best outside firms for every single micro-strategy you can think about. We're trying to put them in the best possible position. So if it's $50 million and it's preservation of wealth, the private advisor team will be working with them on a portfolio that might be more skewed on the fixed income side versus equities and alternatives. But we work backwards from the needs of the client and the family, and we emphasize open architecture and independent advice here.
Let's talk for a moment about the United States economy today, which obviously is important if you're in the money management world. Are you worried about the rate of inflation in this country?
I'm most focused on the fiscal situation in this country. I think that we're still at relatively full employment. We have been in a good time. We run these 5, 6, 7% of GDP deficits annually, and there seems to be no impetus to change that. It's approaching $40 trillion in debt. You're very familiar with all the different benchmarks. We spend more on interest than we do in defense. And that obviously could have rate implications over time. It's a fantastic amount of money to have borrowed, even for an economy this robust and this big. That does worry me, and that could feed into the inflation side. The specific inflation question, David, there's a couple things that make it a very complicated picture for Kevin Warsh as he steps into it at the Fed. The first is AI, which is being implemented everywhere. I mean, every private and public company is trying to figure out how to use the tools for greater productivity. And these large language model companies like Anthropic are working with a lot of these companies, and it's moving faster than even I thought. That could have a depressing effect on prices. You could have a productivity pop coming out of that, and it could, make things cheaper. as the agents are start to be embedded in more companies. So he's got to look at that. Then he's now got an energy shock. So it's a he's got an ongoing, significant fiscal deficit, which, clearly could put pressure on rates, particularly on the long end. So I think it's a complicated picture. It remains to be seen exactly how he starts to play this.
How do you think money management, or particularly your type of money management, will be affected by AI?
I think that the front end of our business, the client interface, because the work we do with families, there's a lot of complexity. You're dealing with the human beings. The front end will continue to be our private advisors and their teams. I think we can make them more efficient. And I have said before that if we have a private advisor today that has 20 clients with $100 million, 20 families he or she's taking care of, and 5 people on his team or her team, they could have 40 clients with $100 million, $4 billion of client assets, and 5 people on the team in 3 or 5 years. So I do think it's going to make our advisor teams more efficient, our whole team, our whole firm more efficient. The great thing about being in a growth firm is that means that we can, hire fewer people, but we don't have to rationalize the way a lot of these big firms will have to do it.
So if you look in the future, what is your biggest worry about for the U.S. economy?
I worry about is the fact that we've got the most transformational technology that we've ever seen, you and I or anybody, in the form of AI. And it's going to affect every aspect of our lives in every single business, private or public. And my colleague Rashir Sharma reminds me that there's never been a breakthrough technology in history where more jobs weren't created rather than the ones that were lost. So net positive on jobs. And I think that ultimately that could be the case here, but we may have a transition where agents are able to do things before we have new jobs created. So I think the transition coming from artificial intelligence is likely more comprehensive and impactful than the country is yet ready for. We have these incredible American families that come in with incredible success in maybe building a business and in creating the wealth. We're counselors in that, and that's a real privilege to do that.
What is it about money management that appeals to you? What is it you like about managing other people's money?
What I like the most is the counseling aspect of it, and I do refer to our private advisors as counselors. When I worked in investment banking, I like to think that I was providing great advice to my clients. And I tell people today, younger bankers, you want to really get a long-term client, make sure you tell them when they shouldn't do the deal, even though you might get a lower bonus a year later because there's no fee. So we're counselors here. We have these incredible American families that come in with incredible success in maybe building a business and in creating the wealth, but they're looking for help on how do they preserve that over generations? How do they talk to children about it so that the ambition is still there in the second and third generation? We're counselors in that, and that's a real privilege to do that because this is really the most important part of their lives.
Let's talk about how somebody like you got into this business. So where were you born?
I was born in Massachusetts, a little town called Fitchburg, which I think is in the western part of the state. My father was a teacher. We had a couple of moves, but I ended up from grade school on in a town called Hopewell Junction, New York, in Dutchess County. My mother eventually went back to college and became a teacher. She'll watch this show, and I'm proud of the fact that she went back to college after my youngest brother went into the first grade, got her degree, and then she taught for 25 years as a special education teacher.
How many siblings do you have?
3 brothers.
And are they all in the financial money management world?
No, one of my brothers is a teacher. There's a lot of teaching in my family.
Okay.
My great uncle was also a teacher.
Are you the black sheep of the family because you're not in teaching?
Well, actually, we can get to that, but I do teach on a part-time basis at Yale Law School, which I enjoy immensely and I'm proud of. My other 2 brothers were more in the business. One was in the insurance industry. But we grew up in Hopewell Junction, New York. I went to John Jay Senior High School. I know you wanted to ask me that. It was kind of a classic middle-class existence with a focus on a lot of sports. But I did well enough to go to Colgate.
Colgate, and you graduated summa cum laude?
I did, and I also met my wife there. As we were both freshmen, I met her, freshman
And
year.
you're married now for how many years?
36 years.
Okay, so you met as freshmen and you got married eventually, and when you graduated, you went to Yale Law School, is that right?
I did. I went directly to Yale Law School.
All right, you got into Yale Law School, you graduated. Most people who go to Yale Law School, or they don't be a Supreme Court clerk, they're going to a big, high-powered Wall Street firm. But you didn't do that, did you?
I did, and I've always argued it's such a great law school, and there's such a breadth of students there that really when you come out of there, you're capable of doing, a lot of different things. It was a little less traditional when I did it, because I graduated in 1988, and I found out about management consulting in my third year of law school. And I know you made a journey like this too in your career, because I know you're a lawyer. And I got interviews at a couple of the firms, and I had a hard time getting the interviews, and I had a hard time getting the jobs, because at that time they would say, you went to law school, why do you want to work as a management consultant? But I got a break at Booz Allen Hamilton at the time, and it's actually a great story. I was on the phone with the hiring partner, and you and I we've all had these moments in our careers where you could go left or right. And I said, I really want this job. And he said, well, you came in late. We filled the class with business school students. We don't typically hire from law schools, but we'll keep you in mind. And I said, all right, well, I really would like to come here. I'm going to go take this job at a law firm. Please let me know if it opens up. And he says, are you telling me you'll take the job if I offer it to you right now? And I said, absolutely. He said, hold on. And he came back 2 minutes later and he said, you're in. And it changed my life. And I went to Booz Allen Hamilton.
So you go there, and you're there for how many years?
About 5 years.
And then what did you do?
I went to Merrill Lynch.
So you started at Merrill Lynch, and what is your job at Merrill Lynch?
I was the chief operating officer in municipal securities. I was hired by a guy who wanted to make that business run more efficiently. So it was a good transition, and it leveraged some of the skills I had developed at Booz Allen. I did that with him for a couple of years, and then I went into investment banking. And it was a bit more of an easier transition from inside the firm to go into investment banking.
And you rose up to be the number 2 person in all of Merrill Lynch. How many years did that take?
I joined in 1993, and I was the president in 2007.
Okay, that's pretty good, except the financial crisis came along. What happened to Merrill Lynch that required you to effectively sell the company?
It was a great firm, and we had a great set of businesses at the time, and I think it's been an incredible deal for Bank of America. We own half of BlackRock, which people forget, which was a deal that I put together in 2006 with Larry Fink. We own 49% of BlackRock. I sat on their board. We had a great wealth management business, a good investment bank. The reason it had to be sold was really a small part of the firm. Within the fixed income trading area, they had built up a portfolio of CDOs backed by late-stage subprime real estate collateral. And that portfolio, I think, roughly was $70 billion when we went into the crisis. And I think we wrote off $55 billion against that one portfolio.
So you sell Merrill Lynch to Bank of America for the purchase price was?
$50 billion, $29 a share. David, I'll never forget this. It was the most stressful stretch of my life. So
after you sell, do you say, okay, I'm out of here, I'm going to go do something else and take life a little bit easier? What did you do? I
went back to my 20-year Yale Law School reunion, because it was 2008, and the dean at the time was somebody named Harold Koh, who was Hillary Clinton when she was Secretary of State. I think he was her chief legal counsel, and he's a wonderful man. He said to me, you look terrible. If you decide to take a break, come up here, teach, write, do whatever you want. It's a dean's appointment. I'm happy to have you around here. It'd be good for the students. And I said to him at the time, I just engineered this sale. I did the negotiation. I feel like I need to stay. And 2 months later, I just realized it wasn't going to be a long-term career for me there anymore. And I called him up, and in early January '09, I went up to Yale Law School.
And how long did you teach there?
9 months.
9 months. And then you joined Morgan Stanley?
Yes.
You did that for about 4 or 5 years?
6 years.
6 years, okay. Then you left, and you said, I want to be more of my own boss and really build something myself?
100%. I wanted to try to build something, and I really did believe there was this niche in the marketplace that I described for comprehensive advice to high net worth and ultra high net worth families.
So did you come up with the idea of buying Rockefeller & Co., or did somebody come to you with it, or how did that work? Ironically,
the investment banker who was representing Rock & Co. was somebody I had competed with at Goldman for years, who had become a good friend of mine. And Don, when I found out that it might be for sale and that he was the banker, I called and I said, I'd be interested in this, and I've got, an equity partner that's with me, and the rest is history. We stepped in and we bought it. How do you spend your day? Are you traveling to meet clients or prospective clients, or your employees, making speeches? A lot of my week is around leadership. Internally with my team, making sure that we're doing the right things across the organization. I spend a tremendous amount of time with clients, because I remind people all the time, there is no business without the clients. I am the CEO, and a lot of them want to see me. One of the nice things about this firm is our clients number in the thousands, not the millions. So I spend a lot of time with clients, and I spend a lot of time with our private advisors on the things that are affecting their ability to serve the clients. We have a great culture. Perfection is not attainable, but if we chase it, we might just catch excellence.
So let's suppose somebody is at Colgate now, a young professional, man or woman, and a young student, I should say, and wants to get into the financial service world. Why would they want to come into this business? And what are the skill sets that you look for when you're hiring young people?
I think it's a great business for a young person to get into because I think the client interface is fascinating. It's obviously about helping them take care of their wealth, and there's an analytical side to that, but there's the human side to helping take care of a family. And you get to, in our firm, you get to work with these wonderful families that are really some of the most successful American families. You get to know the story. You're helping them through something they're less familiar with, what to do with the wealth. The skill sets I always look for, David, I want the people who have the passion to go for excellence. But I also want to find the people that want to do that in a way where they work well with others.
Well, suppose somebody comes along, they're very smart, and they're a history major, or they're an English literature major. Do you just don't hire them, or do you take a look at them?
I always love liberal arts. I did major in economics, but I was at Colgate and I studied a lot of things. And actually had an anthropology professor at Colgate who I am still in touch with to this day. He just recently retired. He had a big impact on me and opened my mind in so many different kinds of ways. I think liberal arts training is going to be more valuable in the world that we're moving into, because I think the AI tools and agents are going to do a lot of the specific things that you could teach in a more technical manner to human beings. Whereas the liberal arts skills, which are a lot about the ability to deal with different things, different people, there's going to be a premium on those.
So let's suppose I say to you, you've had an incredible career, but you must have made some mistakes somewhere. What's your regret? Do you have any regret about anything you did in your career?
I regret having to sell Merrill Lynch. It was a great firm. The mix of businesses should have enabled it to survive that credit crisis, because the kind of exposure that we had on the fixed income side of that balance sheet wasn't core to what Merrill Lynch was. So, I regret that we got to that point, and I do sometimes think back to, could I have done things differently? I wasn't yet president when that position was put on. It didn't report to me, but could I have done more to try to have that company still be around today? Because it was a 94-year-old company when I sold it.
What are you most proud of having achieved in your career so far?
This firm, Rockefeller Capital Management, because we started with not a lot. We had 182 people. It was a very different firm, so many of those people are not here. We have some great people that were here in the beginning.
How many employees you have now?
Close to 1,700. We have a great culture. We talk about excellence in everything here, and there's a high bar. People reach for excellence. And one of my favorite quotations is Lombardi, who you'll remember, said in the 1960s when he was paraphrasing Aristotle, "Perfection is not attainable, but if we chase it, we might just catch excellence." We're trying to catch excellence here, but we focus on collaborative collegial culture. We want it to be a place where people love to work with others.
Any regrets about not practicing law and doing something really important for society, like being a corporate lawyer?
I really, when I look back at my career, and this is probably true even for somebody as successful as you, there might be some bricks you want to pull out of the house, and this brick or that brick. But I really do believe that by the time you get to where I am, I'm 38 years in and I'm 63 years old. If I start pulling bricks out, the whole thing will come down, and it's a different, it's a whole different path. So I don't have any regrets on that.